Hey folks, Tuesday, 10th of May, 2022. It's just coming up on 9:30 here in Europe, and more downside yesterday seen on equity. So let's jump on over and have a look at what we've seen. Starting off with the Nasdaq on the daily bars. As I said yesterday, as we are below this range, we're not really hopeful of holding on to any of the prices that we've seen last week, and so we have departed down, hitting into that 12,181s as a target for us yesterday. On the bounce somewhat this morning, we're up 1.6 on the Nasdaq. However, we are quite down on the week so far. So I think it's all important for this market to hold that 12,181s today and this week. I have very little hope of that happening over the scale of the week. I think we may look for a bounce above the 12,426, but I just don't know, in, as I say, the grander scheme of the week, if that's going to yield something more significant on the upside, like 12,898. So bracing for more downside here. And we'll really look for opportunities to sell. Obviously, the 12,701s will be a nice area to look to sell. It did come in there at 7:30 on last Friday for a bid, but then just got totally sold down from there. And sellers, I'm not the only person looking at these levels. Going out on weekly bars, see on the main right hand side of your screen here, we are kind of trading back under the high of the week of the 31st of August 2020. And, it's just, yeah, really coming in support there in the low of the week of the 1st of March 2021. So, really kind of wiped out a whole year's worth of value creation here on the NASDAQ. Is it cheap enough for dip buyers to come in here? I think a certain amount, but I think the dip buyers are going to like a bit lower, to be honest. The major dip buyers, and June and July rate hikes to come. Tech is really getting murdered at the moment. Kathy Wood is down, I think, 60%, and not loving it, I can imagine. But she should be at these prices. She should be licking her chops. Everything being super cheap. Looking at the SPOOs, we got the gap fill. Be talking about this since it was, well, I think probably we put this on the radar somewhere in around here. So, pretty much a year now we've been looking for that gap fill. It is now closed at 39.76 on the lows. What I don't like about this being a great turnaround point, I've never really looked at this as being the absolute bottom of a free fall. And we certainly didn't see it become to the tick uh, bottom of the market yesterday. We are definitely retracing back up from this, and I think looking at the SPOOs rather than the Nasdaq here on daily bars, I do think we can get a decent bounce just to kind of put in a little bit of a pullback in what is a downtrend. And probably it's going to be a confluence of 20 EMA coming down here and price coming up to match it. So really, the point of this is to say, well, where can these two find confluence? And that may be probably a retest on the 41.29.5, and then more downside. But it all depends on how crazy the selling is going to get. I personally think there's a lot more selling in these markets. While we might be on the bounce today, I think there's going to be more sellers come into this market or these markets this week. Similar stuff on the Dow. Looking at WTI, yeah, in within the lack of white smoke out of the European Union, i.e., a decision on what they want to do about Russian bans. We have had one decision out in that they are banning insurance on shipments of Russian oil, to Europe. So I think that they're coming in with some. I think they're getting close on a detailed strategy here. I think there's ways and means around the insurance issue. It just has to be insured outside the EU. So I think that's one bit of progress, but it's definitely not the meat on the bone that the buyers are going to need to then just absolutely load up the boats. I think what's happened overnight is probably enough for us to bottom out now, even with a lack of decision from the European Commission or the Union, I should say. I think we've reached down for 100, and maybe 100 can be a baseline for us now to get back on up here. So 104.12, the low of 2011 and 2012, uh, three times tested. I think I think that's it's generally a good contextual level. Is it a decent level to trade off of? No, not really in my estimation. But this is not trading or investment advice. Really just giving you some context on this market. I think the bulls are definitely coming in there from the lows that we saw last night. I think by the very fact that we didn't liquidate to $100 handle is quite telling there. It's just too cheap under this, sort of environment that we have for oil at the moment. And that gas getting liquidated quite heavily yesterday. Last time I checked it, it was down about 7%. Looking at where we opened on this, it was down actually into the close. It looks like down about 11.7% yesterday. Really one way, bit of liquidation. Again, lack of decision out of the European Union on what they want to do. And I think traders just kind of took it in their wings, you know, scaling out of those contracts to then wait for the decision and then maybe load up again on the long or short, depending on what that decision would be. However, because it's a ban, you have to err on the long side, and so down to 6 spot 938 here on that gas. And we go over to the daily bars here to actually have a look at that. And we are really actually weekly bars here. So this level that we just traded into was the low that came in 2012 and was somewhat defended, and a good line in the sand, I would say, for the nat gas market. So it's not too hard for me to see that if we can hold 930 spot 938, I think we can easily get up on $10 over the coming month. So that's just what I'm seeing here. I don't think we need to trade back to $4.50 where the 100 EMA is. I think that's way too cheap for nat gas, especially with this environment. What you're seeing this morning as well on the risk front, the bunds finding a footing on pivot and generally the top of this zone that we have here at 151.67. I think we can now get back up to the trend. I'll show you the bund on the daily or weekly bars here. It was kind of this upward trend, this kind of mega upward trend put in from the lows of 2016, the lows of 2018, and it just got breached there last week to the downside. Now we're trying to recover this area. It's going to be interesting to see where yields go from here, to be honest. And everybody's kind of talking about that really at the moment. And with the yields pushing 3% on U.S. bonds or U.S. 10-year, it's very hard to kind of look for the longs and speculative tech and equities. And so I think that's a really large part of the selling picture that we have on the equities markets at the moment. Cable was being absolutely shot to shit by Governor Bailey on the MPC rate decisions last week. Just no refuge for the sterling contract here. We have hit into that one spot 22.78 on the downside. I don't normally look at cable that much, but it's just really in quite a sweet spot here. Testing the lows of 2020, with 29th of June, actually, that came in there. So testing those lows already this week. Are the buyers coming in here? Have they had enough out of Bailey? Is the news, is there enough blood in the streets here for cable? For me, I think we will make a little pop here back up to certainly 24 22s, 25 34s. I don't know if we're going to get up there. I don't know if that's really the trade. It's really light liquidity in cable at the moment, so good trades there for those who want to wait. And Dixie, yeah, nice chat this morning about Dixie. I think generally, while we see Dixie now consolidating sideways, this is really since we've had the commencing of the rate hike cycle. Obviously, we're up here through the telegraphing of the rate hike cycle to come. Now we're kind of getting the basis point hikes coming in. Is the dollar topping out? Well, one thing you want to be trading if you have a good read on the Dixie is the euro. And so we were talking this morning about, have we seen the lows for the euro? So we got a nice doji there on last week's candle, bit of green on the screen this week on this candle. If we go over to the 60-minute chart, something we were looking at this morning is really, we've had then roughly, this is where Christine has been signaling the July rate hike cycle commencement for the ECB. And we've just kind of gone sideways here, similar action you've just seen in the Dixie. So is this going to be sort of this accumulation zone that we get in for the euro before we then start to move up? And I think timing wise, I'd like to be a little bit closer to July when we get that, when we're going to get that first rate hike cycle or rate hike out of the ECB and Christine, and then we can really start to appreciate up in the euro. Now, the one thing that could put the skits on that trade is a higher risk environment in the Ukraine, much further escalation of the situation in terms of violence and aggressiveness. But I just don't know what more we can price into a higher dollar picture. I just don't know what is going to bring us there. But, if anything does jump out of the woods, of course, it's going to be kind of dollar bid scenario. But, with the yields now maybe steadying off at where they are, we could probably look to see that there is the top is well, the top is being put in on the Dixie. So, let's it's an interesting picture there. I think personally, I think it is in. I think it is in. So let's monitor that as we go along. All right. So that's it for me for another pre-US session. And we'll be live all day in the Discord. And yeah, have a good one, and I'll talk to you tomorrow. All right, cheers.